Crow your coins, ladies and gentlemen. Welcome. I am the Crypto Crow. It is Monday for you fine ladies and gents. And I think we're gonna open some eyes today, and I feel like I'm figuring some things out that I've touched on in the past. I've done videos on in the past. I haven't looked at it again until recently. But this is big, and I think that we're onto something here that is going to change the minds of many when they look at this. So make sure you stick through to the end of this video, because I think your eyes are going to open too. I'm actually quite excited about it. I think some people might be a little frustrated when it's by the end of this, but we're going to just go ahead and dive in. So basically what you're looking at here is my breakdown of a Wyckoff distribution. Okay. Now, I've done videos on Wyckoff before, and this is basically a trading system that was established. I think it was like, I don't know what it was, like 1878 or something like that, 1873. I don't remember, a long daggone time ago, over 100 years ago, 140 years ago. And basically the idea of the entire Wyckoff system is to fool retail money. Okay, because this is why they call us dumb money. They call retail investors dumb money because we follow their trends. We follow what the smart money does. And typically in retail markets, we are led by emotional triggers. Where have I seen that before? And so you have the people at the top that are pulling the strings of the emotional triggers of those beneath them, often to their own detriment. Where are we seeing this? Anyway, sorry, I can't help myself sometimes. It's just too easy. But I'm also a victim of this, which is one of the reasons I got into bot trading, because I get emotionally triggered. Even when I know better, I do things in trading that I know I shouldn't when I'm doing them. And I'm like, God dang it, why don't I listen to myself? So anyway, the Wyckoff accumulation and distribution patterns are basically methods of operating on a major level. We've noticed, especially since institutions and Wall Street have gotten into crypto trading, that we've been seeing these patterns form up more and more with extreme accuracy. And I've gone through this. This starts all the way back in January of 2021, and we've begun a Wyckoff distribution pattern here, and we follow it exactly. Pretty much exactly. And this is on a daily chart. Okay. So I'm not going to dissect this one because I've got others that I am going to dissect, and I'm going to explain what a lot of these symbols mean, and I'm going to show you some other stuff. But I just wanted to show you, this is from January of 2021 and went all the way to May of 2021. And then this distribution concluded from start to finish. Okay. Now, if we move forward, we then had a Wyckoff accumulation. And the accumulation patterns seemingly, I think it depends on where you are in the market and how easily money is moved up or down, given what is liquid on the order books, ultimately dictates these time frames. That's my speculation, because you can see these patterns take shape in a variety of different time lapses, if you will, but ultimately they spell out the same things. And you can go back and back test this like I have. I mean, they're dead ass. Okay, so using my young terminology there, but yeah, they're very accurate. No cap. So anyway, so you can see this accumulation all the way up here where we got our first line, and you can see I drew these green patterns up and down, kind of showing what was happening and what was coming. So then the trick at this point is how do we use this moving forward to better understand what's going on in the market? We can see a very brief Wyckoff distribution pattern here. This is October of 2021 and ultimately concluded around December of 2021. And we just continued to further degrade as time went by, all the way down to here of January 2022. Then what did we do? Well, we started moving into a new system of patterns, okay? And what we're going to do here is we're going to break this down a little bit because this is going to lead us into where we are now. And as this thumbnail says, if this is true, a new bottom is coming, whether you like it or not. Some of you are going to say, oh, you can't base the market off of one indicator, right? I get everything you're going to say. We're going to find out soon enough, but here we go. We're going to dive into this. So basically, we're going to start this pattern out of the way in March of 2022. And this is what I would consider an extended pattern. Why do I think this is an extended pattern, and why do I think that this is boiling out the way it is? Because I believe that it's much more difficult to move the markets strategically in a bear market cycle when there's not as much FOMO allowing the money to be risen up or pushed up. And so to play these patterns appropriately by the book, it takes a certain amount of time for each thing to take place in order to trigger the next phase. So we came all the way down here initially in May of 2022. It looks like around May 11th, May 12th, into the preliminary support. Okay. And from the preliminary support, we came up and we just kind of, retested things a little bit and came all the way back down here to this SC, which is the selling climax. This is basically, we've dropped as much as we can push the market down. We're accumulating more tokens or crypto or Bitcoin or whatever you want to call it, or whatever you're working with. And we've come all the way down. We've reached this selling climax where, the liquidity started to get thinner. And so we started to move back up and we went sideways, ultimately, kind of a choppy sideways, buying and trading, playing the market all the way to the point of an automatic rally. And this was ultimately the first peak of an automatic rally after the bottom, the selling climax, which this is showing the selling climax around 17.6. Okay. But we haven't bottomed out yet. We had people calling the bottom around here saying we aren't going to go lower. We're not going to go lower. We're at the bottom. Is this the bottom? Right? So we had a lot of that. So what happened? It started to move up and everybody's like, rejoice. We're going into a bull market. We keep seeing this kind of stuff. Nobody has the patience. Nobody wants to wait for things to play out as they're meant to play out or as they're being played out intentionally, playing with market sentiment, playing with retail investors' emotions. So anyway, we came back down after that, and around July 26th of 2022, we reached a secondary test, okay, which is basically, it's a test against support and resistance as it's being established during this phase. We came back up and in a reversal where we peaked out yet again a little bit higher than the automatic rally this time, though it was just a wick. We did wick higher and boom, we started a new downtrend. Okay. So from August 13th, all the way down to where the new bottom was established, likely not the last for those of you. And I'm telling you, I'm feeling this. I've been feeling this, and there's so much more coming on a macro level that I believe is going to be. Here's the thing, and I want to address this real quick. If traditional and Wall Street traders and all of these people in the market with major capital entering the space, trading the space, they have high frequency trade machines, AI, all of it, you name it. BlackRock has one of the most powerful AI systems out there. BlackRock's Aladdin system alone I'm quite confident, could very easily and effectively establish these Wyckoff accumulation and distribution patterns based off of market liquidity and sentiment established through news media and so forth. And if BlackRock, that manages more assets than any company in the world, controls more assets, has more power and influence over what's basically being distributed through our propaganda machines all over the place. And let's be honest, even though crypto is crypto, there's a lot of propaganda in crypto. There's a lot of tribalism in crypto. There's a lot of we're going to cover everything associated with this project, but not that project. And we're going to pick and choose our favorites. We're going to support those and not those. We see a lot of that kind of stuff going on with Cardano and Ethereum. All of the Ethereum maxis that have their money and they have all this money invested in Ethereum and the Ethereum ecosystem. They completely neglect Cardano because it's one of the biggest potential competitors for Ethereum in the current and future markets. So it's being suppressed quite a bit. And we see that in on-chain data metrics. We see that across the board. And a lot of that is being controlled for a reason, because a lot of these major players in the space that are already invested in one technology don't want the new one adopted until they're really in it. And until there is more of, let's just say the ability for applications to be developed on the platform a little more easily and a little more broadly in scope. And I think that that's what we're seeing. But the point is that a lot of the media narratives can also be bought and sold. So a lot of the crypto media that we see, I have price sheets. I know what it costs to get on any of these websites. I can publish articles out there for $1,000 and start creating a narrative for either myself or another project or whatever it is that I'm doing. It's not that difficult. Money buys all. And when you're talking about if I wanted to trade, if I wanted to establish a Wyckoff distribution pattern and I wanted to create sentiment around that market structure, and I've got millions or billions of dollars at stake creating these structures, playing off of the retail sentiment and retail emotions, how difficult do you think it would be for me to spend $100,000 on creating a narrative in the crypto space, just buying articles, saying what I wanted to say? How difficult do you think that is? And that is a big part of what plays into crypto sentiment and trading sentiment. And it's also one of the reasons why I believe it's also much cheaper to create much larger amounts of money trading in crypto right now than it is in traditional markets. So just keep that kind of stuff in mind. Now, as we're continuing to move up here, we start our downtrend, and it's a big one, okay? So from August 14th all the way down to November 10th to where we see this new bottom. Now we're getting closer to where we're at. Now we start to rise up. Rise up. I can't sing, so I'm not going to bother trying. So anyway, this is where we're at right now. We've already come up. And we've basically established this new peak, okay? And in this new peak of this pattern, we started to come down. Now, this is where I'm going to show you something. This is what I see being potentially the future of Bitcoin and the crypto market overall, because we all know that when Bitcoin goes down, everything else does. When Bitcoin goes up, everything else does. Ultimately, from here, we continue to chop down into a spring. The spring is going to be lower than this secondary trigger down here in phase B. Okay, it's going to be lower than this trigger here. All these tests are lower tests during this accumulation phase. And they're all lower. Well, this one was a test. This was a lower test. We had the selling climax that started this whole thing and basically gave us confirmation of a pattern beginning. Now, from here, we get this new spring. This spring could be anywhere from 14.5 all the way down, I'm guessing, to 10.5. This is my buy zone. It still is my buy zone, has been my buy zone for quite some time. I don't know how many months. And I did raise it up a hair because I had it down into the 9,000s. I don't think we're going to see that. I honestly, at this point, don't even think we're going to see 11 or 12. But I do believe it's absolutely possible that we see something between 12.5 and 14.5 as the new and final low of the crypto market. And then from there, we start our rise up. And here's the thing. I suspect that by the halving in 2024, we're likely going to be somewhere around $30,000. Okay, maybe into the 35 range. That's my guess, into the new halving in 2024. We have quite a bit of time. Now, think about it this way. This is a daily chart, and as we continue to go down from here, we're going to really want sentiment. We're going to want sentiment that's continuing to help us drive this price down and create some, I don't know, like people upset, people unsure about the crypto market. Oh gosh, the price is going down. I just read this article yesterday that the SEC is going after Kraken and they're going to go after staking. And I don't really understand or know what that means. And a lot of these coins I have, I'm able to stake them and generate money. I don't want the SEC to come after me because I'm trading these. I just, a bunch of kind of ignorant as bliss kind of, I'm just going to get out and wait and see what happens. And we're going to start seeing a lot of that. And we're going to see a lot of these narratives continue to pop up likely with more and more efficacy, if you will. Basically a stronger sentiment to the downside. And what's going to be happening is as we continue moving further down into this downside and likely to create a new low, guess what? The institutions, the major whales, the big players in the market that are driving the sentiment down are going to be right there picking up your scraps as they're averaging down and continuing to buy then slowly as liquidity rises. So in other words, as the exit liquidity continues to rise, the people that are accumulating that and taking that cryptocurrency off your hands very happily are going to continue to do so. And away we go. Now I'm going to show you this, and then you might have a better idea as to what I'm talking about. This is a Wyckoff accumulation pattern, and if you look at what I've done here, you can see how this lines up quite well. Now, this, you can see this point here. This is basically we're at right in the middle of this, right between the ST, the secondary test in phase B and the spring. That's basically where we just concluded our most recent peak as we've continued down. And if you look, if this schematic, if this plan were to play out, you can see I've drawn it out. You might be able to expand the time frame a little bit, so maybe this reaches a little bit closer to the next halving. But if this were to play out, and by saying if, I'm saying if we don't reject this entire scheme altogether by reaching or closing above a $25,000 Bitcoin, it's very likely that this is going to be a really big deal. And if we continue moving lower, it's very likely we're going to continue lower into the new bottom. And that's all she wrote. I mean, as far as I'm concerned, this is what I'm waiting to see play out. This is what I'm going to be following consistently. Now, finally, there's this question. Okay, Crow, so what if you're wrong? All right, maybe we do move down and we move down a little bit, but then we get a big blow up and we move back and we close above 25,000. All right, so we're in a crossroads here. We're at a very defining moment where we're going to say, okay, either sentiment is going to continue going down as new articles, new sentiment is being established in crypto media, basically creating this true capitulation that I've been waiting for and haven't felt like I've seen in some time. And I think that on an emotional level, given the macroeconomics of the global state right now, given where we're at on a macro level politically, globally, economically, all of these different things going on, popping air balloons all over the place, and there's just everything seems insane, and it doesn't make a whole lot of sense because we're being told one thing when we're seeing another, which is very commonplace in today's media and politics and everything else. Look over here while you're getting smacked in the back of the head over here, and we're seeing this time and time again for the last several years, and it's been absolutely getting nuts. But I think it could be the calm before the storm in the sense that once we bottom out and we start to really go up, sentiment is likely going to change substantially. Now, what is one of the other reasons why I believe that as we get closer to 24, things start to really pick up? I think we're going to get worse and worse now in 2023. And call me crazy. It's not that crypto is the end all be all, but what is the overall narrative of the world right now? CBDCs, digital currency, regulation, keeping everyone safe, keeping everyone in control, keeping them in charge of what we're doing with this CBDC while under control, right? So we're going to be pushed into a lot of these narratives as we continue to move forward. But on a grander scale, politically, what do we know is likely true? What we know is that, in my opinion, my humble opinion, okay, some old salt and pepper ogre on the interwebs that doesn't know anything. I'm not a financial advisor. I'm not psychic. I don't know anything. But what I do know is my own opinion. And my opinion is the current administration will likely do just about anything to keep things growing and at least appearing better than they were prior to 2024 for reasons we all know. Because they're going to want to do everything they can to try and empower themselves and their image and their perception of the world, of society in America, and basically get as many people as possible to say, wow, you know, we went through a really rough time, but that was just the cost of doing business. And that was the struggle of all of these great significant changes we're seeing in the world. Look at how much better we're doing. And then should we end up with a new administration under another party, that's probably when everything's going to crash. And that's when everything's going to go to hell in a handbasket. I don't know, but or maybe it might be that way either way. But if they're able to pin it on the other guys, all the better, because there's so much happening now while so much is also being kind of held afloat, in my opinion. I mean, there's so many things happening right now that make me like, pretty soon we're going to be selling eggs for Bitcoin. Okay. Like, why is that? There are so many little things that a lot of people aren't paying attention to. They don't care. They don't understand. They don't think it affects them. So they're just like, wow, whatever. I'm mad about this. And that's what I'm going to yell about. Screw the price of eggs being $8, $9, $10. Like, used to be like $1.75 a carton. Like, that doesn't matter, right? I'm vegan. I don't care about eggs. Down with eggs. I don't know. Like, it's just insanity. But this is just the side effect of the overall thing that's happening. And what's happening is a great reset, a great change of the master plan and infrastructure, finance, economics. I'm telling you, folks, I think this is what's coming. And there's a lot of reasons why I think that this is going to play out the way I have it mapped out here. I could be wrong. If I am wrong, that's fine. I'm averaging in anyway. And what I would suggest, I'm not suggesting anything because I don't know shit, but what I'm ultimately doing, and it will be my next video, is I'm going to be doing a video on dollar cost averaging strategy, averaging into the market in a time of indecision. You're not quite sure if it's going up, if it's going down, what's going to happen, how do you do it? And I've got a plan that I'm basically going to finalize it tonight. I'm probably going to shoot it, and it'll be ready for tomorrow. And I'm going to go into an average in plan that should help break things down for you. So make sure you subscribe if you haven't already. Hit that like button. Crow is back. I'm going to make some shit happen here real soon. I'll talk to you soon. Thank you for joining me. Crow your coins.